The world watched in anticipation as President Trump prepared to unleash a new wave of tariffs. These reciprocal tariffs were not targeted at any specific country, but rather encompassed imports from all nations. The exact details of the tariffs remain shrouded in uncertainty. Speculation swirled around a tiered system, potentially imposing varying rates on different goods or countries. Another possibility was a blanket tariff, a flat 20% levy on all imports. The implications of such a move were significant. Economists warned of a potential trade war, with retaliatory tariffs from other nations. Businesses, already grappling with supply chain disruptions from the ongoing COVID-19 pandemic, braced for further uncertainty. Consumers faced the prospect of higher prices on a wide range of goods, from electronics to automobiles. Treasury Secretary Scott Bessent, in an attempt to assuage concerns, characterized the tariffs as a negotiating tactic. He stressed that the announced rates would serve as a cap, leaving room for countries to negotiate lower rates by making concessions. However, this did little to quell the anxieties of investors and businesses alike. The world waited with bated breath, the specter of a global trade war looming large. The interconnectedness of the global economy meant that the ramifications of these tariffs would be felt far and wide, extending well beyond the borders of the United States. As news of the impending tariffs reverberated across the globe, financial markets reacted swiftly and decisively. Futures tied to major stock indices plunged, signaling a day of steep losses. The S&P 500 futures, a broad measure of the U.S. stock market, tumbled 1%. The tech-heavy NASDAQ 100 futures fared even worse, plummeting 1.3%. The Dow Jones Industrial Average futures, reflecting the performance of 30 large publicly owned companies, were down 0.8%. This latest downturn was not an isolated incident. The specter of Trump's tariffs had been haunting the markets for weeks, injecting a significant degree of volatility. The S&P 500, in the 6 weeks leading up to the tariff announcement, had closed lower on 5 occasions. Investors, already grappling with rising inflation and interest rate hikes, were now forced to contend with the prospect of a trade war. The uncertainty surrounding the tariffs was a major driver of market anxiety. Businesses thrive on predictability, and the lack of clarity regarding the scope and duration of the tariffs made it difficult to plan for the future. This uncertainty also extended to consumers, who might hold off on major purchases, fearing higher prices down the road. The stock market, often seen as a barometer of economic health, was sounding the alarm. The tariffs, if implemented, threatened to upend global trade, stifle economic growth, and erode corporate profits. The road ahead appeared fraught with risk, and investors were bracing for a bumpy ride. Amidst the gloom and doom surrounding the impending tariffs, a ray of hope emerged from an unexpected quarter: the labor market. The ADP employment report for March, a closely watched gauge of private sector hiring, painted a surprisingly rosy picture. The report revealed that private companies had added 155,000 jobs in March, exceeding the Dow Jones estimate of 120,000. This surge in hiring followed a more modest gain of 77,000 jobs in February. The robust job growth provided some much-needed reassurance to an economy teetering on the brink of uncertainty. A strong labor market is often seen as a sign of economic health, bolstering consumer confidence and encouraging spending. The report suggested that despite the looming threat of tariffs, businesses remained optimistic about the future and were willing to hire. However, the report was not without its caveats. Job openings, a measure of labor demand, fell slightly to 7.57 million in February, down from 7.6 million in January. While this decline was relatively small, it could potentially signal a slowdown in hiring in the coming months. The ADP report, while encouraging, provided only a snapshot of the labor market at a specific point in time. The true impact of the tariffs on employment would likely take months to materialize. Nevertheless, the report offered a glimmer of hope amidst the gathering storm clouds of a potential trade war. While the broader market grappled with the implications of Trump's tariffs, individual stocks charted their own courses, driven by company-specific news and investor sentiment. Tesla, the electric vehicle maker, saw its shares dip 2.3% in pre-market trading. This decline came ahead of the company's highly anticipated first-quarter delivery data release. with investors eagerly awaiting news on production and demand. Encino, a provider of cloud-based software for financial institutions, experienced a precipitous drop in its stock price, plummeting 33% in pre-market trading. This dramatic decline followed the company's disappointing fourth-quarter earnings report and weak guidance for the upcoming year. Investors, spooked by the news, headed for the exits, sending the stock into a tailspin. Petco, the pet supply retailer, bucked the downward trend, with its shares surging 7%. This rally was fueled by news that CEO Joel Anderson had purchased nearly 1.6 million shares of the company's stock. Such insider buying is often viewed as a vote of confidence in the company's future prospects, signaling to investors that management believes the stock is undervalued. Meanwhile, Circle, the issuer of the USDC stablecoin, made a bold move, filing for an initial public offering on the New York Stock Exchange. The company, seeking a valuation of up to $5 billion, was betting on the growing mainstream acceptance of cryptocurrencies and the increasing demand for stablecoins, which offer a less volatile alternative to Bitcoin and other digital assets. The stock market, a complex and ever-changing landscape, reflected the interplay of macroeconomic forces, company-specific developments, and investor sentiment. As the world awaited the fallout from Trump's tariffs, individual companies navigated their own unique challenges and opportunities, their fates intertwined with the broader economic currents.